Hello everyone, welcome to one another episode of weekly sectoral analysis. So we have the daily and the weekly time frame chart in front of us. Preliminary in the weekly time frame chart, we can clearly see that the trend is down. The direction is down, but there is no momentum. Market has been choppy. Yes, market has moved from 24,500 to basically almost near the lows of sub 23,250. But momentum is something when market falls one way down or it rises one way up. That has not been the case. It has been pretty choppy. Same thing is visible in the daily time frame chart. You can see that initially market did drop. It gave a pullback and then again it's dropping. After this drop, what we can see is consistently this candle is a big hammer. Then we have the second candle, which is a green candle. The third candle is a red candle because we saw that on Friday the Nifty closed just around 49.85 points down, but we have a wick on this downside. Again, over here we have the green candle, and there has been some positive news also coming up where government has done some smart changes where there is a probability as per many people that the FIIs might stop pulling out money from Indian markets. I don't know what will happen. Only time will tell. But according to that, the psychology of the market says that the ceiling over here, the support level over here seems to be around 23,095 to 23,025. Basically round figure में आप 23,000 बोल सकते हो. So if we trade below 23k, close below it, sustain below it, then maybe lower levels are visible, but till that time anything can happen. By the way, Gift Nifty is already trading in the red, so if there is a gap up or a gap down, no one can actually predict that. And I generally do not talk about dollar because I don't do intermarket technical analysis. But here, if you see, this is the third week. Just to note, this is the third week where over here we can see that USD INR has fallen. Over here, this is the weekly chart, by the way. Okay? So over here we can see that it has fallen in the first week. Then in the second week also this is a small inverted hammer, and again over here this is also a pretty big inverted hammer. Is this good for Indian markets? Obviously yes. In the monthly time frame chart, after a pretty big rise from 83.65, this is way back in May 2025, we have one of the biggest, not exactly, but sort of biggest candle in the month of May. It is not exactly like a high wave candle. It is not exactly like a high wave candle, but it is something like a high wave candle. High wave candles are something like this. Okay, and high wave candles are nothing else but it shows that the trend, whether the trend is up or down, it is overstretched and probably it is tired to go up. The next candle is still open, यानी कि जून का जो candle है वो अभी तक पूरा नहीं हुआ है because June month is still going on, so we don't know what can happen. Overall, it shows the trend momentum is still up in the dollar, but yes, we are overstretched as there is a fair bit of space between the price and the dual moving averages. So if this comes for a gap filling, then this could be positive for Indian equity markets. Let's see what happens. All right. Now, overall, the state of trend of Nifty in the weekly time frame chart is surely flat. It's flat. Banking, surprisingly, you will be really surprised to listen, but yes, the answer is that the trend and momentum both are down. It's down. Yes, you will be amazed to listen to that because you will see this particular candle in the previous week, which is a pretty decent hammer or sort of candle. But सिर्फ एक candle से चीजें change नहीं हो सकती ना. It has to be multiple things happening together because over here the trend has been down, the momentum has been down. Previous to that also the trend momentum had been down, something like this. So things continue to remain negative. And in the last 4 days, Bank Nifty has more or less, it has shot up. It has not come down after the first trading day in the last week. Okay. The 2nd June, 3rd June, 4th June, 5th June. Every candle since the 2nd of June, Bank Nifty has shot up. That is the reason we have a hammer over here. The minimum what it needs to do is at least trade above this thing, this particular high, to, you know, put a crack in this lower low, lower high sort of formation which is happening in the daily time frame chart of Bank Nifty. At least utna karna chahiye to disturb this downward trend trajectory. But overall, so far, trend momentum is still down. And the PSU banking space mainly. The PSU banking space is one sector where we need to be very, very careful, because even over here, the trend and momentum is down despite 3 weeks of pullback. We should understand that the trend momentum is negative in the weekly time frame chart, but in the daily time frame chart over here, we can see some sort of choppiness in the last few days. So if there is any negative trade on the downside, be very careful. I'm not saying the sector is not negative. It is negative. But when the previous few days have been choppy, you need to be a little bit more watchful before you initiate any trades. Private banking space. Private banking space, again, I should say that the trend and momentum is flat. It is already trading at a support. The support is between 25,733 to 25,381. I will say that there is one or two banks which are looking negative in the private banking space. I will not take the name, but they are heavyweights. But apart from that, the overall sector is still flattish. You can see in the weekly time frame chart specifically, the direction is down, but this is no momentum at all. This is just up, down, up, down. If you want to magnify and see it, you can see this thing chopping around. One shot, again down, again chopping around. The good thing is that ये जो support band है, ये टूट नहीं रहा, which is a very good thing. So far, the trend momentum is down, and one should be very, very careful if you are initiating trades in the private banking space. Again, it is one of the sectors which has the highest weightage. So if anything positive has to happen in Nifty, private banking space will have to do a lot of stuff. Initially, in the last couple of weeks, also I had said about the same thing. It did climb higher, and then again it gave away all the steam. Now this time it is trying to pull back in the last 4 days. Whether it's successful, whether it goes above this thing, 27,000, I don't know. Well, we'll wait for time to tell us. Oil and gas. Well, oil and gas space had been flat till the time of last week. It was flat. It had given a decent pullback, came down, was trying to retrace. But after last weeks of close, you can see over here the last 2 weeks have been negative candles. Now it seems that the trend and momentum is surely negative in the weekly time frame chart. Even the daily time frame chart shows a very clear trend which is negative. Lower lows, lower highs. Very, very simple. So overall, it's a weaker sector. I think the heavyweight stocks in this particular sector are looking weak. So be careful. Going ahead with the auto pack. Auto pack, I would say the trend momentum is up, no doubt about that. I mean, it has been able to give a very good pullback, and there are continuously positive candles coming up here. The last week, even this candle, yes, last week's candle is a negative candle. I can say that overall trend momentum is positive, but when you see the daily time frame chart, you will possibly, as a directional trader, you will not be very, very comfortable when you see a movement like this. Again, are we going to trade the index, the auto index? No, we'll be trading the stocks. So if you want to trade stocks in the auto index, you'll have to be extremely, extremely stock specific. If you just have a blanket view on the entire sector, that the entire auto sector is bullish and each and every stock will, rise on the upside, my friends, that's not going to happen. So you'll have to be very, very selective and be very, very careful. Going ahead with the consumer durables sector. The consumer durables sector, surprisingly, is the trend and volatility is down. It is down because the sell-off started at 38,400 and it almost made a low of 30, just sub 3,400, 34,400 levels. You might see the last two candles, this one and this one, and you might say that it is positive. Yeah, it is positive, but what about the sell-off which started from here? That is how the trend and momentum calculation is done. So the trend momentum is down and one should be careful in this sector if you are a long only trader. All right. Consumption pack. Consumption pack on the upside so far is still positive. This has been a first rally in the entire downtrend. After this rally, there has been a pullback. This pullback so far is okay. We are still getting retraced. If you just plot Fibonacci over here, we are still near supports with few positive candles. Even over here, if you can check, last 4 candles in the last week have been a positive candlestick. The first candle is a bullish candle, second one is a small hammer, third one is a bullish candle with an upper wick, and fourth one is a very, very small hammer. Not very impressive in terms of hammer, but still they are pretty decent. So overall trend momentum in the consumption pack is positive. We need a bit of thrust on the upside for this sector to move on the upside. Finance pack. Finance pack, unfortunately, now the trend momentum is down. The previous week's candle was absolutely negative. This week, although we have a candle which has a lower wick, which adds to a little bit of hope, but considering the entire trend momentum is down, there is a possibility that since we also have lower lows, lower highs in the daily chart, I think the pullbacks will be used to sell. So if you're a long only trader, once again, I would like to stay away from the finance pack. FMCG. FMCG sector, I think in the last 2 weeks had been positive. It had started showing some signs of positivity, but now after the last 2 weeks of sell-off, especially this week, the trend and momentum is now flattish. Neither it is up, neither it is down. So we need to understand one thing. In terms of weightage, I think one is the private banking space, other is IT pack, and third is possibly, if I'm not wrong, the FMCG pack. FMCG pack holds a decent weightage in the Nifty. So when the weightage of FMCG factor shows a flattish movement, it will add the choppiness in the Nifty. So be very careful and try to stay away from the FMCG pack. Well, IT also now it is flattish. You will say that, sir, itna bada pullback aaya. What about this? Yes, I know. But this entire pullback is just a very, very small pullback in this entire fall. In that context, if you see, this is nothing. And it has been just chopping around since multiple weeks. Shot up, came down, again shot up. As of now, so far, after this week's close, trend momentum in the IT space is flat. And this is the index in the IT space. If you look out at the stocks, I will not name the stocks, but there are a few stocks which are looking positive and there are a few which is negative. If someone is trading the IT space, be very careful. Somehow I'm expecting a lot of volatile moves coming up in the IT space. So be extremely careful and also have a look at the monthly time frame chart, what is happening in the larger time frame. Infra pack. Now in the infra pack, I would say the trend and momentum is still up. You can see this rally, a pullback. So far the pullback is very, very shallow. It has not been able to break the previous low. So far it is absolutely fine, no problem. Now what we want is for some positivity, we should see some pullback going up and breaking this high. If this happens, it will be even better for the infra pack. So overall trend momentum is positive. Whether this high breaks or not, only time will tell. Metal pack. Now in this metal pack, I would like to wait for a while and I would like to share something. The trend and momentum in the metal pack is positive. Only thing is, according to my analysis, somehow the metal pack seems to be slightly overstretched in the weekly time frame chart. We can already see the last week's candle, which is an inverted hammer, and the current week's candle, which is a big red candle, which has closed below the lows of the previous week. Now, is the trend momentum positive or negative in this sector? I would say this is positive for sure. This is positive for sure, no doubt about that. We can already see some sort of sell-off happening in the daily time frame chart also in the metal pack. Now, will this start pulling up immediately in the metal pack? According to my analysis, it can, but seeing the weekly time frame chart, I would say to have some sort of doubt on the metal pack, be very cool, calm and composed before you initiate any trades in the metal pack. There is a slim possibility that this time the pullback, you can see over here the pullbacks in the metal pack have been pretty shallow, and as soon as the pullback is over, a small rally starts. This time, maybe for good, the pullback could be slightly larger in measurement. So be very careful. It's not that the sector is negative. The sector is positive, but at times the pullback can be slightly large. And when the pullbacks are large, if you start trading by buying dips or something, it will unnecessarily get your stops triggered, and then the sector or the stock will move up. So just be watchful. Overall, it's positive, but you have to be watchful. Pharma pack. Pharma pack, I think one of the strongest sectors. The trend momentum continues to stay up. You can see a very good bullish candle here in the last week. Even the daily time frame chart is looking terrific, and overall this deeper pullback should be used as a means to get back into the pharma pack on the upside. PSE sector. PSE sector gave a very big rally from almost the lows of just sub 9500 levels. It rallied all the way till just above 10,800 levels. This did look promising. It also traded above the previous high, but the way recently prices have corrected in the PSE sector, once again, surprisingly, now the trend and momentum in the weekly time frame chart is flat. And in any sector, in any index, if the trend momentum is flattish, I would simply avoid that sector for sure. Okay. Realty. Realty, I think the initial thrust on the upside has started. We are now consolidating. We have retraced also. We are consolidating, which is okay. We need to see a move about 800 levels in the realty pack. We also have a higher low over here. Need to see a movement above 800 levels and sustain above it. And if it continues, I think realty will start looking much stronger than what it is looking right now. So overall, it's in the positive state of trend. Only problem is it does not have that much of weightage in Nifty. India defense, again, one of the most strongest sectors right now. A very big rally, a small decent retracement with positive candles. The retracement has been okay, but it is choppy. Once I think we see this range getting broken, and if the momentum continues, it could look much brighter as a sector in the entire list of these sectoral indices. So overall trend momentum is positive, and the biasness in this sector is also positive. Midcaps. Midcaps, again, the overall state of trend is positive. Rally, retracement, decent, not great candles, decent candles with lower wicks, which shows buying interest. Even over here, we can see that it continues to stick to higher highs, higher lows formation, which is okay. It's not great, but it's okay. But we need to see these dips getting bought into, and we need to see having a higher high in comparison to the previous one. Overall state of trend continues to look positive in the mid cap space. Before I end this video, I would just like to say one thing. It's a time where I think things are changing very, very fast. There were sectors like IT which were down recently. They are now flattish. There are sectors like metals which were looking extremely positive. Even right now they are positive, but they look slightly overstretched. There were possibly sectors like finance which were looking positive a few weeks back, and now they are looking down. So things are changing very fast. Even oil and gas it was flattish and now it's down. So I'm not saying that the overall market is bearish or the overall market is bullish. There are few sectors which are bullish, there are few sectors which are bearish, and there are few sectors which are now flat. So it's not a very, very conducive time to make money in the markets. My simple view will be that overall Nifty is flattish, market is also flattish until and unless it breaks the range. Basically this range like 23,000, or at least I should say 24,100 or 200. And if it breaks this one, then it's great. And we need to also identify which sector will move. So I would suggest that do your sectoral analysis well. Then within that sector, which stock can move, also you need to know that. And again, when markets are very choppy, it doesn't pay to stay in a trade for a very long time. I would like to do hit and run trades, like trade low, make your money as fast as possible and get out. When market starts trending in one direction, either up or down, then I think holding your trades for a slightly longer time will make more sense. Okay, just my view, but I think you can decide it for yourself. All right, so trade less and trade wisely. Thank you.